Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Mark Marex, product development specialist with Nasdaq Index Research, to discuss Nasdaq-100 performance in presidential election years. Mark, it's great to see you. Welcome back to Trade Talks, and let's take a look at your first chart here to examine just that.
Thanks, Jill. Great to be here. And of course, thought it was quite relevant to look at the performance this week, which has been pretty extraordinary. I don't think anyone was really expecting the overall market or the Nasdaq-100 to perform like it has. So I thought I'd give folks a bit of a history lesson, what we've seen since the 2000 election. You could see we've had two really bad years for the Nasdaq-100 in terms of full year performance, down 37% in 2000, down 42% in 2008. That is not what we're seeing this year at all. We're at 38% more or less as of this morning, year to date. But you can see that those monthly returns in September and October, at least, were pretty close to what we've seen in the last five elections. Typically, September's and October's heading into a presidential election are not favorable for the overall market or for the Nasdaq-100. We were pretty close to those averages here. Of course, November, you can see the big standout. We're up over 9% month to date. And typically, those numbers have averaged to be much less favorable. We'll see what happens in December. The averages, are very minuscule. Returns tend to be not as volatile in the month of December. But given how just unpredictable and surprising this year has been in every way, I wouldn't put too much stock in those historical averages. We may have another big month either up or down in December before we round out this very impressive year so far for the Nasdaq-100.
So we're in the 11th month of 2020. How has the Nasdaq-100 performed relative to the other major averages, including the Nasdaq Composite?
Yeah, so, not only has the outperformance been really stellar with regard to history for presidential election years, but versus other benchmarks, what we've got here is in the light blue, the Nasdaq-100 ticker NDX versus the comp, which is the broader Nasdaq Composite. That's all the stocks listed on the Nasdaq exchange, outperforming that broader index by about 6 percentage points year to date. But then we've got below that, and I mean way below that, the S&P 500 up 8.7% year to date. And actually both the Dow Jones, which is very large caps, and the Russell 2000, which is the small cap index, they're both at minus 0.5% year to date. Kind of interesting breakout there, which really kind of demonstrates just the impact of index methodology. The Dow is 30 stocks selected by a committee. Even though it's large cap, it's behaving returns-wise a lot more like the Russell 2000, and small caps have been really struggling all year long. So however you look at this, I mean, the Nasdaq's outperforming both the S&P 500 and the Dow Jones, which are the large cap market benchmarks, by a really, really substantial margin. I don't know that we've seen this type of outperformance in the last 20 years. And then mid caps and small caps have also been just generally underperforming large caps as well all year long.
All right, if we take a look at our last slide here, of course, valuation always comes into question when we're talking about the Nasdaq-100.
Yeah, look, September, we had that correction early September. We had another kind of correction in late October going into the election. I was starting to think that price to earnings ratios for the index were on their way down closer to maybe a 30 to 35 range. This week has just totally flipped us back into a trend where we are approaching 40 a PE on a trailing 12-month basis. Starting to get very, very difficult to justify these valuations from a fundamentals perspective. But, that's hard to know how it's going to pan out. If earnings recover strongly next year, then these won't look too out of whack. But again, from a traditional valuations perspective, and we've talked about sort of alternative ways of determining valuation as well recently that look more reasonable. From the traditional perspective, we are more expensive than we've been in a very, very long time on this index.
All right, Mark, great stuff. Thanks for joining us on Trade Talks.
Thank you, Jill.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.